Good morning and welcome to the Street on BNN Bloomberg. I'm Roger Peterson. Thank you very much for joining us. Coming up on the show today, Alan Small, Senior Investment Advisor at the Alan Small Financial Group, IA Private Wealth, will be joining us for the hour. In 30 minutes, ahead of this weekend's Juno Awards, Andrew Cash, President and CEO of the Canadian Independent Music Association, will be here to take a closer look at the state of the Canadian music industry. And of course, we want to hear from you this morning on First Call. Reach out with your questions, and we'll have Alan Small answer as many of them as he can at the end of the show. The number to call, 1-855-326-6266. We'll open the phone lines in about 30 minutes. Our email address is firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. Bell Canada is selling its land mobile radio network services business to Motorola in a deal worth $675 million. The business provides two-way communication services such as walkie-talkies and push-to-talk systems. Motorola's CEO says the acquisition will help protect long-term resiliency. The deal is expected to close in the fourth quarter of 2026. BCE is the parent company of BNN Bloomberg through its Bell Media division. Ontario's projected deficit for the year is almost double what was originally expected, with the government now suggesting it will be more than $13.5 billion. Through 2027, the updated figure is up almost $8 billion from what was laid out in last year's budget. The province is citing trade tensions and geopolitical forces as driving factors behind the increase. We'll find out more from Ontario's finance minister this morning on BNN Bloomberg at 10 a.m. Eastern. Halifax-based real estate company Clark is buying the Ravelin Properties REIT in a deal valued at $1.1 billion, including assumed debt. The deal is expected to close in the second quarter of 26. The chair of Ravelin's board says the deal is in the best interest of stakeholders as the company continues to face solvency and leverage challenges. And now our top line story. U.S. stocks are headed for their longest streak of weekly losses since 2022 as traders grow more nervous about a protracted war in the Middle East, while the Macquarie Group is warning oil could hit $200 a barrel if the Iran war drags on until June, with the Strait of Hormuz staying shut. For more on the continued conflict and its impact on the markets, let's bring in our guest for the hour, Alan Small, Senior Investment Advisor at the Alan Small Financial Group, IA Private Wealth. Alan, thanks as always for joining us.
Morning.
Never a dull moment going on right now. Let's get initial reaction to that call for a $200 or $200 a barrel.
Yeah, that's a tough one. I'm if the strait is still closed in June, I think there are a lot of problems. Obviously, I don't see it. I'll be honest. I don't. I think on both sides, whether it's the U.S., whether it's Iran, they both have. They both want to get this over with. Obviously, Iran, different reasons. Mm-hmm. They would love to stay in power. I'm sure those that are in power. Yep. But, who's in power right now? I don't know if anybody knows. And I just, I know obviously the midterms coming up in the U.S., the longer this goes, the higher the costs, the lower the markets, the inflation, the stagflation. There's a lot of pressure building up there. So I got to believe something is going to give in the next few weeks. I know that the deadline's been extended out by President Trump, I guess, another 10 days or so before they really go in hard and start taking out different things, not just military.
Start going for energy infrastructure.
Yeah. So for me, I just don't see it lasting until June. I think I agree with the president. I think maybe another couple of weeks at the most. To be honest, I'm surprised that it's lasted this long in this way. I thought by now things would be further ahead. I know the president says they're ahead of schedule. I'm not so sure I believe that. But I'm definitely in the camp that I don't think we're going to see over $200 barrel oil. I just don't see it at this point.
Well, and we haven't seen 120 yet. Well, we did, briefly, and then it's kind of dropped down and is hovering. WTI is 95 today, I think?
Yeah, around there. Yeah, and so, they talk about the Trump put, right? Anytime the markets seem to be going really bad, oil spiking, markets dipping, and the president comes out and says, well, we have negotiations going on, and then the market, goes higher again. So I think there is the job owning by the president talking about trying to keep the markets level, or at least the best he can. He has said a few times that he's surprised things haven't been worse. But I think he's doing a lot to keep it from getting worse. I think, and that's what keeps the market in there, right? It keeps those individual investors buying on the dips, because everybody knows that just when you're, selling short the market or doing whatever you think, a good headline or a positive headline comes off, and then the market rallies like we saw recently, 1,200 points on the Dow in a matter of seconds. So we know that is in the cards at some point. Do you want to be on the other side betting against it? I probably wouldn't be. And so I'm one of those buy the dips type of investors, looking for good quality investments that are cheap, because we all know from history, once this conflict ends, and it will end, markets do rally after these types of conflicts, and very quickly. Sometimes it only takes weeks or even just a few months, and all of a sudden you're up 10, 15%. So I think that's what investors know, and that's why the market's hanging in as well as it has.
Any factors do you think that the G7, their meeting, foreign ministers are meeting today? They're going to get pressure from the U.S. to get involved in this, and they've stayed away from it. And also the finance and defense ministers are meeting. First time in 50 years, I think they're meeting on Monday. Is that any of a factor on what may unfold in there and then have an impact on the markets?
I think it can be a factor. I think the longer this war carries on, the more likely you're going to have countries coming in, whether they're NATO countries, whether they're Gulf state countries like Saudi Arabia, Kuwait, and others, Qatar, et cetera. I think the longer this drags on, I think the worse it is for Iran, because obviously they continue to send drones and missiles into their neighbors, and that's not a good thing. And so eventually you may see the Saudis getting more and more involved. We're hearing rumblings of that happening now. So I think a meeting like this...
They've been very patient.
They have been, which is interesting and surprising in my opinion. But I think the longer this drags out, the more likely you're going to get NATO countries. And, the head of NATO has said that we do support the United States and that they do support the U.S. and that they are, mounting the troops, and they are trying to figure out how they can help. So, yeah, I think it is a timely meeting, a timely gathering of these individuals. And I think it can make a difference.
All right, we're going to wrap it up there for now, but lots more coming up. Up next, though, we'll take a look at the markets before the bell. All right, let's see how things are shaping up on the markets. We'll start with the U.S. futures and its risk off. It's continuing, even with that 10-day extension on Trump's threat to target Iranian energy targets. You can see everybody is in the red right now. The Dow by nearly 0.5, the NASDAQ by 0.75, and the S&P 500 by 0.5. Asian markets, stagflation fears hitting Japan's Nikkei. It was off today. China, a little more resilient, ending up in the Hang Seng by 0.38. The CSI 300 up by 0.56. Over to Europe now, and of course the uncertainty showing there as well. You can see the FTSE down below 10,000, off by 0.36. The CAC Caron down by 0.69, and look at the DAX off by 1.2. TSX had a green start to the day and then quickly turned, and it was closed the day off by 1.5%, 1.53, down below 32,000. Pull back across the board, except utilities ended up in the green. Some of the movers and shakers yesterday. BRP Inc., the /CA sub-voting, it was up about 4%. Thomson Reuters up 3.7%. Going the other way, Celestica down by 9.35%. And America's gold and silver off by 9.1%. Taking a look at the metals, gold's turned. It was down earlier. It's up by about 0.9. Still trading below 4,500. Silver down again and down below 68. And look at copper. It's off by a quarter point down to 546. Western Canadian Select. Another rally yesterday, up 5.68%. And oil today, crude, the WTI, let's see how it's moving today. It's up as well, 2.3, that was 2.4%, and closing in on $97 a barrel. Well, the province of Ontario is seeding a new fund with as much as $4 billion aimed at encouraging pension funds and other investors to plow money into areas like artificial intelligence, defense, and manufacturing. For his take on the new fund, we turn to our guest for the hour, Alan Small, Senior Investment Advisor at the Alan Small Financial Group, IA Private Wealth. Is this going to stir the pot? You think this is going to get some interest?
I hope so. I think, putting some money towards these initiatives, obviously, this is where the province thinks the future lies, right? AI, et cetera. And I think it can work, but I think you're going to need the help of others to come in, and that's the hope, right? That they put money in, pension funds put some money in, private equity, private businesses put money in, and then they grow the pot, and then they're able to spend. Obviously, some may say the negative is the government's going to be picking winners and losers, although they're looking for someone to come and manage the fund. So we'll see who that is chosen to be.
Yeah, they're going to bring in an outsider.
An outsider, right? Yeah, which is good. So that maybe alleviate that question about, is the government picking winners and losers and who to invest in?
Hopefully they're investing properly. I mean, it's our money. And so if they're investing it properly and making money, it's not a bad thing, is it?
Absolutely not. And I think, as I said, I think it'll work if they get the buy-in from the private businesses and the equity funds. So that's tough because when you talk to pension funds, they invest abroad. Most of them invest abroad. You talk to mutual funds. Even Canadian mutual funds today, they have to keep 51% of their money invested in Canada. But I can tell you probably about 48% is invested outside, and a lot of that in the U.S. Yeah. And for obvious reasons, right? Obviously, our market is very small. TSX made up of 210 stocks. You go down to the U.S., there's a lot more choice. And in the U.S., they have a lot more of the things that are growing: technology, AI, the biggest companies in the world.
And we have AI here. I mean, Ontario is one of the, Toronto especially, is one of the leading AI. Toronto, Waterloo, that whole sector right there. But we've got to try and keep people. And we always lose them down to the States, though.
And then that begs the question about why are we losing them to the States? And then you get into other things such as taxation, which the government tried to reducing corporate tax a little bit, tax for businesses by 1%. Just over 30%, right? It was 3.2 to 2.2. So again, I know talking to the Premier myself, I think what he would say is we're trying to get money in the hands of the people, more money in the hands of the people and the hands of the businesses by lowering tax, by spending money. And he wants to continue to grow the province. They had tremendous growth last year, I think 28 billion in growth. So I think, in talking to the Premier, that's what he would say. Yeah. And that's what the budget is telling us, that they want to spend, they need to spend, they'll go into deficit in the next couple of years, hopefully get back to even a few years from now. Spend the money. We need to do it right now, especially while we're in a bit of a trade war with the U.S.
Well, but I wonder, though, with everything that's going on with that trade war, will plans be hesitant to put money in here? Because manufacturing is such a huge central part of Ontario. Will they hesitate with all the instability and unknowns that are going on?
And that's the question I've posed to auditors, to accountants, to a number of individuals. Why would a business come and invest in Ontario or in Canada versus going down to the U.S.? And when you look at it, what are the incentives, right? We have higher tax rates, which is a big negative, obviously. We have a great workforce, but we have higher tax rates. We, interest rates here. I think our Bank of Canada can continue to cut rates to make things better for businesses. Mm-hmm. You look back prior to COVID, interest rates, Bank of Canada rate was 1.75. Today it's 2.25. GDP was growing at 1.9% back then. Today it's growing at 1.7%. So why aren't we cutting rates more? Why aren't we bringing rates from 2.25 to 1.75 where it was back in 2020 to again stimulate growth, stimulate business for borrowing to grow your business? These are the questions that I would be asking the Bank of Canada if I could. And then on top of that, taxes, lower taxes. I think if you combine those two things, you will get business coming here to our country. I think those are the two things that I'd be focusing on. And I know the Premier has said, publicly that he does want lower taxes, that he does like to see interest rate cuts. So very similar to President Trump, right? He wants to see lower interest rates to stimulate the economy down there. And so our neighbors or our friends to the south are now competitors.
And they still are. I still think there are neighbors. They've always kind of been our competitors in many ways. But
they have, but I think more so now. I think we look at them as bigger competitors now. Why would someone want to open up shop up here versus down there?
Well, maybe this will be the wake-up call. Sometimes you need that shock, right, to get governments to give breaks. I know, and people scream corporate taxes, break on corporate taxes drives people nuts. But if it brings companies in, it brings jobs in. Is that?
Yeah, and that's crucial, right? Take a look at our jobs numbers the last few months. They're negative, right? We've lost jobs last month. So we are seeing an economy that is stagnant, just over 1% growth. What's it going to take to increase that? I think it's going to take all hands on deck. I think it's going to take the Bank of Canada making the conditions very good for business. I think it's going to take a reinvent, or at least take a look at our tax policy at the federal level. And I think it's going to take spending. And I think if you combine all those things, the hope is that you will get some stimulative forces in play that will grow our economy faster and more so.
All right, we're going to wrap it up there for now, but we're going to be back with Alan Small, Senior Investment Advisor at the Alan Small Financial Group, IA Private Wealth. To see why Meta and Google are on his radar. Time to see what's on the radar for Alan Small, Senior Investment Advisor at the Alan Small Financial Group, IA Private Wealth. And Meta and Google, the Mag 7, they are struggling this year.
Very much so. And
a lot going on for them.
Yeah, and for different reasons, right? Obviously, yesterday with Google and Meta, we heard about the ruling, the lawsuits, right? The addictiveness of their platform or algorithms or whatever you want to call it. And I guess they lost the lawsuit. I think, again, you know, the amount of money that Meta is going to have to pay, I think it was like $3 million or something. It's a drop in the bucket.
It's what it opens up, though, right?
Exactly.
It opens up to more of them.
Exactly. So the question is now every person, family, parents across the United States and anywhere else going to now sue for the same thing? Mm-hmm. Is it going to set precedent for that? And I think that's why both Meta and Google, I believe, are appealing the ruling. And I personally, I just think it's hard as a parent of 4 myself. I think it's difficult to say that these businesses are at blame or at fault for any negativity that comes from the addictiveness of these platforms.
Well, yeah, but I mean, if they're deliberately directing things and they know they're directing you towards things.
I think they are from a advertising standpoint. You know, businesses pay them a lot of money to have their information sent to those that are interested in, you know, buying ski boots or, you know, buying this or buying that, depending on what you're looking for. They see where you're going online, and then they send you the advertising for it. Very, very convenient, right? But I think that, you know, the kids and you know, and speaking for my kids, of course, you know, we try to monitor, you know, how long they're on their phones, how long they're on their YouTubes and their chats and all that.
Yeah.
And I just think today, you know, we as parents, we try to limit that. And I think if you can do that, it's very difficult, as I'm sure all the parents watching will agree. But I think there is some accountability on the parent side to try and monitor that, speaking from as a parent now. So, yeah, we'll see what happens with the lawsuit. I think, obviously, the appeal, I think it's going to be dragged on for quite a bit. And stocks were down yesterday, but it was a bad tape, right? Meta was down quite a bit, 8%, I think.
Was it 8% yesterday?
Yeah, something like that, down to the lowest I've seen it in quite some time. Stock once upon a time at the highs, $796 a share. Today,
8%, holy cow.
Yeah, today much lower. I think trading, 500 and, was it 547 to close last night? So to me, I think it was a combination of perhaps the lawsuit, but also a bad tape. We'll see if the markets can turn around and go positive today, although they're down again, the futures. We'll see where Meta goes today. Will we see a bit of a rebound? So I'm not sure what the longer lasting effects on these companies will be. I think there's a lot more to focus on for these companies in terms of AI and all the other stuff.
Is this just kind of a further reminder people that maybe the glow is off the rose? What is it? The bloom is off the rose for the Mag 7. I mean, they've talked about AI. They're spending on AI. People are already worried about that. Is this just another reminder that, like, maybe they're not as good an investment as people thought they were?
Well, I don't know if they're not as good an investment, but I do believe that whole AI hype and the impressiveness of what these companies are doing or have announced, I think that shine is wore off. You know, you look at a name like NVIDIA, the biggest company in the world. They come out and tell you that they have $1 trillion backlog of business just from their 2 chips, Rubin and their Blackwell chips. Not mentioning what they do, their chips for cars and their gaming and all the other stuff that they do. $1 trillion backlog, up from $500 billion. So they doubled their backlog. The day they announced that at their conference, the stock went down. What is it going to take for a name like NVIDIA to see $200 a share again, or see perhaps a new high above 212? I don't know at this point. So maybe the shine is off these Mag 7 names. The bar is set so high for them. What's it going to take to impress? That is a great question to ask. And why you're seeing a name like NVIDIA trade with a very narrow trading range over the last year.
Yeah, it's been really flat, hasn't it?
Yes.
Absolutely flat. Is it going to take the AI moment? Will that bring everybody back?
Or
will people still be cautious?
I think people are cautious because it's a law of large numbers, victim of your own success, whatever you want to call it. I always use Walmart, right? You a name like Walmart, at some point it can't continue to grow, or any company. You grow 20%, 30%, 35, 40%. Eventually you go from 40 back to 35, and all of a sudden investors say, is this as good as it gets? And they start to sell your stock because you've reached peak earnings. And so that's what possibly is happening here for those set of companies, whether it's a Meta, Amazon, Google, NVIDIA, whoever it is. Microsoft is about a year ago as good as it gets. And will these companies, struggle just to maintain that high level? I think that's what investors are asking in general right now.
Okay, we'll take a break on that note there. But still ahead, the Junos are coming up. We're talking about the state of the Canadian music industry with our next guest, Andrew Cash, president of the Canadian Independent Music Association. Also, our phone lines will be open for the first call segment. Reach out at 1-855-326-6266. Send us an email, first call at bellmedia.ca. Bell Canada is selling its land mobile radio network services business to Motorola in a deal worth $675 million. The business provides two-way communication services such as walkie-talkies and push-to-talk systems. Motorola's CEO says the acquisition will help protect long-term resiliency. The deal is expected to close in the fourth quarter of 2026. BCE, of course, the parent company of BNN Bloomberg through its Bell Media division. Ontario's projected deficit for the year is almost double what was originally expected, with the government now suggesting it will be more than $13.5 billion in the current fiscal year. The updated figure is up almost $8 billion from what it was laid out in the budget last year. The province is citing trade tensions and geopolitical forces as driving factors behind the increase. And we will find out more about Ontario's fiscal situation and outlook when we speak with Ontario's Finance Minister, Peter Bethlenfalvy. That's coming up on The Open at 10 a.m. Eastern. The maker of Jack Daniels is in talks with French drinks company Pernod Ricard about a potential merger. The talks come as the alcohol industry faces a downturn due to tighter consumer spending. Both companies are valued at more than $10 billion and have described the discussions as a merger of equals. The deal would bring together Pernod's top sellers, including Jameson Whiskey and Absolut Vodka, with Brown-Forman's brands such as Ford's Gin and Herradura Tequila. Quick peek at the markets. Shaping up to be another down day, likely a down week. The Dow off by about 0.4. NASDAQ by 0.6, and the S&P 500 off by about 0.4. Ahead of the Canadian Music Awards, the Junos, we go beyond the red carpet to the business of Canada's music industry. Is Canada riding a global wave or getting squeezed by streaming giants, rising costs, and AI disruptions? Here to discuss this further is Andrew Cash, president of the Canadian Independent Music Association. Andrew, thanks very much for joining us today.
Yeah, nice to be here.
I know, just quickly, I know you're down in Hamilton for the Junos. What's the atmosphere like down there?
Well, it's very optimistic, and I think people are excited about Canadian music, and it's always great to to bring the community together, because really the Canadian music industry is a fairly tight knit and relatively small in the grand scheme of the music business globally, a small, tight community.
And you mentioned about the optimism. Where's the optimism coming from?
Well, in your setup, I think you've accurately portrayed the situation. It's both a time of pretty interesting opportunity for Canadian music, and also, we're heading into a lot of tricky waters, I think, both on the regulatory front, on the legislative front. But I think for a lot of Canadian-owned music companies, if we can just speak about them, because that's the folks that I represent, it's tough making a business of it in Canada, just because of the just the market, and with trade tensions as they are right now south of the border, many music companies are looking to try to find audiences all over the map, and streaming platforms have never made it easier to do that. At the same time, it is also very difficult to do that on those platforms. So I think for Canadian companies, the challenge is really getting, your elbows up, as it were, and really duking it out toe to toe with global competitors on global streaming platforms. That's what we do in Canada. That's how we build audiences, and that's how really Canadian music has been really has found audiences all over the world.
I guess in a world of streaming revenues, I'm a concert kind of guy. I love to go out and watch a concert. I've had the pleasure of seeing a few concerts outside of Canada. But, are concerts still profitable? Are you going to still see these artists go on the road and tour around? Obviously, a few years ago, we saw Taylor Swift. I was fortunate enough to take my girls to see a Taylor Swift concert. But obviously, that is a rare thing to see. But in a world of streaming revenues and higher costs, are concerts going to go away, or are we still going to see artists putting on these concerts all over Canada and other places?
Well, that's a really great question. I think there's a few things going on there. Like, there's the mega concerts like the Taylor Swifts, and they will continue to go on. But what is important to note at this moment in time, as we really think about how AI is going to impact culture broadly, well, one of the things that AI cannot and will not be able to replicate is the actual coming together of human beings to share an experience like music. So I think on the live side, especially for emerging artists and new artists, finding the places to play, finding places to bring your community together is vital. And it is the thing that I think you're going to see more and more of, because that is the actual value proposition for music.
And it's a difficult situation, because I know you hear a lot of musicians say that the only way they can make money is to tour, because they're not making money off their albums anymore. It used to be you made money off the album and you toured to support the album. It's reversed, but it's also become extremely expensive. And then throw in scalpers and the secondary market, whatever you want to call it. I call it scalpers still. With what the province of Ontario has brought in, do you think that will help? Will that make a difference on trying to keep ticket prices manageable?
I think it's a good step. I think it's definitely a good step. I think that you're right. Touring is expensive. Playing live shows is expensive. And below a certain threshold, it is, cost prohibitive, actually. But nonetheless, bands are still doing it. Entrepreneurs are out there opening clubs and sustaining live venues, and I think that's vital. The live nature, and I'm talking more about the grassroots venues and the smaller to medium-sized clubs where artists learn their craft by and large. Those are really key to the future of a vibrant and healthy and economically important music sector in Canada.
All right, I just want to get one more. You mentioned about AI, and I think that's a big question. My son hates AI, they won't listen to AI, anything that has AI in it. Even artwork on the album covers, they won't listen to it. What kind of an impact is AI having on music already, and where do you see it going? How do you see it either incorporating it or fighting it?
Well, there's many different ways to look at this question of AI, and I think that we feel like we're in the early stages of trying to navigate these waters, and many companies, including the large major labels, have struck licensing deals with AI companies. I think licensing is the way to go. However, I think so many artists do not want to engage in it at this point in time. I think obviously for businesses, for Canadian music companies, they're going to want to find ways in which AI can be helpful for their businesses with regards to marketing, data analytics, and this sort of thing. But for music fans, I think it's really important that they know that the music they're listening to is made by human beings, has been written by human beings and sung by them. And I think we really need to ensure that that is always very clear. And frankly, it's not right now on many platforms. It's not clear.
All right, we have to wrap it up, but I am 100% in agreement that I want to hear a real person singing a real song that they wrote. Andrew, have a great time in the Hammer this weekend with the Junos. Thank you very much for joining us. Andrew Cash is the president of the Canadian Independent Music Association. Still ahead, today's market drivers with Bloomberg's Divya Balji, and our phone lines are open. Alan Small, senior investment advisor at the Alan Small Financial Group, IA Private Wealth, is taking your questions. Reach out at 1-855-326-6266. You can email us, firstcall@bellmedia.ca. All right, let's take a look at some of the early market movers. We're joined now by Bloomberg's Divya Balji. Divya, thanks as always for joining us.
Happy to be here.
All right. First up, Anthropic, the IPO. I don't know, is it the IPO of the year or is it SpaceX? Which one's the IPO of the year?
It's such a hard one to point to, right? You have Anthropic, you have possibly OpenAI. SpaceX seems to be leading in terms of how quickly they might actually go to market here. The numbers are still not out there per se from the companies as to how much they want to raise at this point. I think the last we heard about Anthropic is they're looking at raising about $60 billion. But we still need some sort of indication from these companies as to what they're looking at. I will say, this seems to be potentially a blowout year for IPOs based on just the facts of these three big companies. You're looking at trillion-dollar values and, going into the stock market. I think what's also interesting here is who gets there first. Right now, it seems like it could be SpaceX based on how close they are to actually filing that prospectus. But the later you are, is it possible you don't get as much investors coming into this? Or on the flip side, is it just going to be there's so much money in the market, people looking to invest in things like AI and even space, that it's just going to be a really big year. And also one more thing I would bring up is also the fact that these big heavyweights going into stock indexes, they're going to really shift how the market looks at these companies. It's going to be very AI heavy in a lot of these indexes. Is that a good thing? How do you manage something like that? There's a lot here going on. I mean, still at this stage, nothing has been confirmed about companies like Anthropic and OpenAI, but it is certainly possible that they're looking at these IPOs and seriously considering going public this year.
All right. If I say talks of a merger between Pernod Ricard and Brown-Forman, it's like, oh, okay, two companies. But then I say Jack Daniels and Absolute Vodka, and people's ears perk up.
Yeah, that's right. I mean, Pernod Ricard is obviously the bigger one here with a lot more spirits names that people will know, like you've mentioned already. I think what's also interesting here, it's one, Pernod Ricard is a French company, and then you also have Brown-Forman, that's a U.S.-based company. What does a deal like this look like in the current environment that we're in when it comes to the Trump administration? I would say overall, analysts are quite upbeat about this deal. They seem to think this is a very good strategic deal. Even from a commercial standpoint, it's very good for growth for both companies, particularly in spirits sales. Clearly these companies are indicating that, a merger like this could actually help them with that growth as well. You even have Deutsche Bank upgrading the shares of Pernod Ricard, particularly pointing out to that company's stock underperformance right now and possibility of this deal going through, possibly helping the shares as well. So overall, it's incredibly positive. I will say the deal still needs to be done. They are still in talks at this point. There's also this idea of both companies having controlling family shareholders. How is that going to work out in a future deal? I think there's still a lot to be worked out for this deal, but overall, the market seems quite positive on this.
All right, we'll wrap it up there. Divya, thank you as always. Have yourself a great weekend.
You too.
Bloomberg's Divya Balji. Still ahead, we'll take a look at some of the notable analyst calls and recommendations moving the markets, including Argan. Let's take a look at some of the notable analyst calls and recommendations. National Bank financial analyst Patrick Kenny raised the recommendation on Tidewater Midstream and Infrastructure Limited to sector perform from underperform. Tidewater Midstream reported earnings and sales Thursday that trailed estimates for the quarter. The PT set to 950 Canadian, implying a 3.5% increase from last price. Argan is up 12% on light volume after the power plant builder reported earnings per share and revenue for the fourth quarter that beat the average analyst estimate. Argan raised to overweight at JP Morgan, PT of 550 US. And over on the London Stock Exchange, Future PLC shares fall as much as 14% after the publisher was downgraded to hold from buy by Jefferies, which says the company faces dual headwinds from both AI and social media content. Analyst Weng Lum Ku says Future's e-commerce affiliate revenue may face significant risks as consumers shift purchases to agentic AI platforms, and AI could also be a headwind for Future's ad revenues. The company is also lagging behind peers and independent content creators in pivoting to social media content that bypasses traditional institutional gatekeepers. PT cut to £466 from 1,220. Well, for the first time since the Cold War, Canada has hit its target of spending 2% of GDP on defense, an increase which is expected to transform our armed forces. The benchmark, which was set by NATO, amounts to more than $60 billion a year. CTV's Judy Trin now on the spending milestone and what it will get us.
After touring a warship, the Prime Minister announced that Canada had taken aim at a NATO target and hit its mark.
In 10 months, we have invested over $60 billion in our defense and security. And as a result of these efforts this morning, NATO confirmed that Canada has achieved its 2% defense expenditure target.
Getting from 1% to 2% has taken 12 years. Progress has been slow until Carney's investment surge in 2025. For the first time, all 32 NATO members have reached the 2% target.
For too long, European allies and Canada were over-reliant on U.S. military might.
The 2% pledge was first made in 2014. Conservative Prime Minister Stephen Harper didn't want to do it.
I'm certainly not going to spend on a massive military expansion just for the sake of doing so.
Under former Prime Minister Justin Trudeau, Canada was called out on the international stage.
Talk about riding on America's coattails. They have the safety and security of being on our border.
Movement didn't happen until the biggest player in the alliance uttered threats.
And they said, if you don't pay your bills, we're not going to participate, we're not going to protect you.
Canada may have spent more than $60 billion on defense in 2025, but the military is still short about 15,000 soldiers, and from jets to ships to submarines, half of the equipment isn't working.
We are still waiting for new submarines. We are still waiting for new tanks and other armored vehicles for our Army. And we are still a long way from having new warships.
The overall readiness, the ability of the military to actually conduct a military operation or go to war is at a multi-generational low point right now.
Going forward, Canada and other NATO members are committing to spending 5% of GDP on defense by 2035. For Canada, that means spending $150 billion annually. Judy Trin, CTV News, Ottawa.
When we come back, Alan Small will take your questions on First Call. Time for First Call and first email. This one is from Paul. I have an oil ETF, XEG. Your guest made a statement that the markets will jump when Trump's military excursion ends. Your thoughts, please, on whether my oil ETF will do the same, will trend sideways, or if it will be the lone wolf and fall.
I would take the lone wolf and fall. Yeah, when you look at right now what's going on, obviously oil is the benefactor of what's going on in the Middle East. Oil companies trading at all-time highs right across the board, whether it's a Canadian Natural Resources, a Suncor, a Chevron, an Exxon. Go through any of the names, which I did actually last night before coming on air today. You notice they're all at their highs. So, and that's obvious for obvious reasons, right? Shortage of energy around the world, not getting through the Strait of Hormuz, oil. So I would actually say once that strait is open, it may not take even the war to be over, but if they can get that strait open, even militarily, I think the price of oil will fall, and an oil ETF will fall with it.
All right. Next one up, an email from David. We were talking about this as well. I own Google, have since 150S. I am not concerned with the recent decrease in share price. My question, how may the SpaceX IPO impact the business, as Google was an early investor as well? Would you buy here? A lot going on in that email.
Yeah, a lot going on. I would be a buyer of Google, not so much because of SpaceX, but because Google is a fantastic company.
Google.
And trading right now, 24 times earnings, down about 20% from the highs. It's on sale again. And it wasn't that long ago that Google was out of favor, and then everybody bought into it, and it became the darling with their Gemini 3.0 AI. And then all of a sudden, over the last little while, Google has fallen out of favor, and yesterday they were obviously in the media for the wrong reasons with the lawsuit. So I am a buyer of Google or Alphabet at these levels, and I would be a buyer, not so much because they were an early owner of SpaceX, although SpaceX is going to be a huge thing, but I would buy it because it's Alphabet and their business is fantastic, and they're trading relatively cheap right now.
Yeah, and SpaceX, we're just reading, a $1.75 trillion valuation.
Yeah, and interesting enough, SpaceX is the one company I get asked the most about when they're going public over Anthropic and some of the others. So SpaceX, I think, is going to have or garner the most interest. Not surprising, it's Elon Musk, right?
Yeah. Do you think they'll hit that?
I don't know. I think it's, I would say probably not initially. I think that's a huge valuation. But you never know, right? As I say, and I don't put anything past Elon Musk. With him, anything's possible.
Yeah, I know. As much as people want to hate him, you can. He keeps making money somehow. Okay, next up, email from Heather. Alan, what is going on with gold?
Yeah, interesting.
I stress that.
Yeah, gold is, a lot of people are surprised about how gold is trading. I think the way to explain it very simply is gold is a hedge against the U.S. dollar. We know the U.S. dollar has gained a lot of strength. Yeah. In fact, it's been the best performing currency now for a little while. It's been the best performance we've seen in years. So when the U.S. dollar is strong, gold will go down. And we're seeing gold fall from $5,600 an ounce at the top, now $4,400, as you see there, down quite a bit. But again, it's a alternative currency. It is, it's been going up because the anticipation of the Fed cutting rates, in anticipation of a further weakening of the U.S. dollar. That did not happen or has not happened this year because of the war, and we're seeing the reverse play out in gold. For all of you that thought gold was a safe haven, I don't know if the word safe and gold could be used in the same sentence. To me, gold is a very volatile investment. It always has been, and I think it always will be. And I think if you're going to own gold, it's definitely not for the faint of heart. The only thing that's dropped more from the material side is silver. Silver's dropped by half this year. So got to be careful owning those names. Perhaps when the war ends and the talk about cutting interest rates again starts to come up, maybe that's when you see gold move higher again.
All right, even copper's slumping right now, too.
Absolutely.
Okay, this one is from Arlo, this email, and it says, your thoughts on Nutrien?
Nutrien, interesting, right? With all the, again, the Strait of Hormuz being shut down, the fertilizer, that has caused shares of Nutrien to surge. I think it got up to as high as 116 recently. Nutrien's always, it's an interesting name, obviously, the combination of two big ag names in Canada, the potash, obviously the things that farmers need to grow their crops. There you can see the chart, the spike, and now the come down, because I think as we start to hear more and more of the conversation that perhaps the strait will be reopened, and we're starting to see ships get through, albeit a small amount, fertilizer prices, or a name like Nutrien, name like CF Industries in the U.S., we're starting to see those stocks pull back just a little bit. If I'm an owner of Nutrien, I would have been a seller a little bit at least of your stock in and around 110, 115. I'd probably still take some profit off the table if you're sitting on a profit. I'm just concerned that when this war ends, the price of Nutrien will come back to where it was trading prior. It pays a good dividend if you've owned it for a little while, so that's a good thing. But I think you could see the price pull back when the strait gets reopened.
All right, we've got to wrap it up there. Alan, thanks as always for joining us. Have yourself a great weekend, sir.
Thank you.
And that is it for us here on the street. Thanks to Alan Small, Senior Investment Advisor at the Alan Small Financial Group, IM Private Wealth, for joining us today. Lindsay's up next with the open. Trading gets underway in about 30 minutes. Have a great weekend.